Let's bring in this morning Henry Fernandez, who's the CEO of MSCI, and he joins us from our Singapore bureau. Good to see you. I hope you're doing well, Henry. Let me just ask you about the current market conditions right now, because it's certainly changed over the past few years with the financial crisis. Do you think that MSCI and the benchmarks and the indices, in terms of the makeup of companies, fairly represents what's happening in the markets these days?
Absolutely. We calculate about 130,000 indices a day, and that is slicing and dicing the whole world in 80 or so different countries. So, our indices are covering most of the stocks in every one of these countries, and they are market cap weighted, and they represent exactly what's going on in pretty much every corner of the markets.
Henry, let me talk to you about criteria for the makeup of your indices and your benchmarks. In the past, it was the average number of shares traded for the stock, market value, free float was accounted for, and also representation of the industry. Post-financial crisis, has that criteria had to change?
We haven't really changed at all our methodology. We look at a market and we try to define what is really available for purchase for investors, and particularly institutional investors. So we screen out companies of the non-floater companies. We screen out low liquidity and the like. But the methodology hasn't really changed. What has changed is clearly in the last couple of years is the composition of some of these markets. There have been a lot of companies that have gone bankrupt. There have been a number of mergers, acquisitions, and other kinds of corporate events. But that's normal to see in a downturn like the severe downturn we saw in 08 and 09.
Okay, and Henry, you mentioned your institutional clients. What kind of new benchmarks are they asking for these days?
I think the one area that is beginning to get hot is looking at benchmarks from the point of view of companies that comply with environmental, social, and governance criteria. Clearly, the BP spill in the Gulf of Mexico is raising even more awareness of this. The financial crisis raised awareness of the governance of companies, particularly financial services companies and the like. So we're taking steps to gather a great deal of data. We did this in the context of the RiskMetrics acquisition. Part of that was a small company that did gathering data based on this ESG, or environmental, social, and governance criteria. And we're looking at created indices that would screen for that as well.
Okay, that's really interesting that people are looking more at environmental companies these days. Henry, you mentioned that acquisition of RiskMetrics. You know, also during the financial crisis, there was a lot of questions as to how do you gauge the correct and, I guess, accurate information of a company. Has it been difficult post-crisis to do that?
Well, I think in the case of what we do, which is portfolio construction and risk management, in addition to equity indices, a lot of the tools that we provided to our clients have been pretty useful in terms of understanding the risk profile of markets, the correlation of companies, the correlation of sectors, the correlation of geographies and the like. But we got to remember that a lot of what we do are tools. They're not crystal balls, and they have a great deal of human interaction with those tools in order to come up with the correct answers. So what we saw a lot during the financial crisis was people had ignored the level of volatility and the level of risk and the level of correlation that they had in their portfolios, prior to the crisis.
Okay. Now, Henry, I also want to talk to you about liquidity, because I think the latest statistic shows that $45 trillion worth of assets is benchmarked to MSCI indices. What about liquidity these days in the markets? How are you seeing it?
Well, we follow liquidity only in the context of how we screen out or screen in companies that go into our indices. And there are times in which that liquidity dries up quite a lot, and the times that is surging. And it's that part of it has been volatile also in the last couple of years in some markets around the world. What we are also doing is we're doing some research on how to factor in liquidity in the context of our risk models. Most of our risk models right now are market risk, as opposed to credit risk or counterparty risk or any kind of other risk, including liquidity. But this is another area that our clients are asking for. Are there ways that we can incorporate liquidity in addition to market risk in the overall risk management framework of our products.
And now, MSCI affects a lot of ETFs in terms of the makeup of companies in that portfolio. It seems that a lot of investors here in the Asia Pac still have to go overseas to buy up their ETF holdings. Why don't we see that market develop more here in the Asia Pac?
It's a great question, and this is one of the reasons for my trip here right now to Asia. We are trying really hard to see how we can develop the ETF market here in Asia. We are taking some steps to do that in Japan. We have launched a couple of ETF, or we have licensed our indices to Nikko Asset Management to launch a couple of ETFs, which they did on Kokusai, the World X Japan, also on MSCI Emerging Market Index. We have a couple more coming up with them. We met with some of the with the exchange in Hong Kong. We met with the exchange here in Singapore, as well in Shanghai, to see what are the steps that we can take to develop the market.
I'd love to talk more, but we're out of time. But thank you so much for your time. That's Henry Fernandez, CEO of MSCI.